So this week on the podcast, I am happy to have Marty Young, the CEO and co-founder of Buckle. Marty, it's great to have you on.
Thank you. Thank you for having me.
Yeah, absolutely. So I'm really interested in what you guys are doing here, because I know a lot of people that I know in the gig world don't have the right insurance. They just
Mhm.
don't. We talk around it all the time, and we say, listen, you got to call your insurance, or just call a different insurance to at least price it out. You got to figure it out, because if you're going to do gig work, you got to make sure you're covered, especially in the rideshare game. Um, I know the other spaces ask for it too, just when you're moving anything for a company, but especially in rideshare. And I know that a lot of rideshare drivers just kind of have their fingers crossed, really, that something doesn't happen. And I've told people that, like, even such a thing as, if you do carry the right insurance, if you pick up a underage kid and you get in an accident, everybody's going to walk away from you. Well, it's even worse if you don't have any. So I guess, can you kind of break down a little bit like how Buckle formed, and kind of how it kind of comes around the gig economy?
Sure. And we do a lot more than insurance. So hopefully this will
Yeah.
um, give you a lot of a better understanding of how we think about the world. First of all, we're very excited about the gig economy. The gig economy, I'm sure you've seen all the data showing how fast it's growing. We've watched delivery explode, how rideshare has displaced rental car companies as the transportation choice when you leave an airport. And there are a few things that we observed early in our journey that will probably resonate with you and your listeners, that are not well understood by typical banks or insurance companies. The first thing is that many of the folks that participate in the gig economy do it as supplemental income to other W-2 employment. And the reason for that is that although, I think Amazon is willing to pay you $20 an hour in a lot of parts of the United States, they're not willing to pay you $20 an hour more than 40 hours a week. And I can go through a whole bunch of jobs, whether working in a call center, doing delivery for the postal service, or UPS or FedEx, or working retail. And although wages are going up, the truth of the matter is nobody wants you to work more than 40 hours a week where they have to pay you time and a half. But in a lot of places in the United States, the gig economy offers an attractive supplemental option, where if you work those 30 hours a week at Starbucks and you get your healthcare benefits, now you can potentially do another 10 or 20 hours a week, however you want to do it, whenever you want to do it, more or less on your own terms.
Mm-hmm.
And that phenomena is really alien to your traditional banks, who are sort of looking for the customer with 2 years of W-2 history and a good credit score, where they don't have to really do much else other than look at those documents, that aren't going to have the technology, the understanding, or even the regulatory support to start looking at all these varieties of different incomes and how they basically stitch together a household budget. The second thing is that we've recognized that for many people, the automobile is the biggest household cost. When you add in not just the costs of your car payment, but also insurance and fuel and maintenance and everything else that goes with it. And what we realized was that the automobile, again, through the gig economy, can turn from being a household cost to a cost of goods sold for a side hustle business. And so really those sort of two observations led us down this path, that if we could figure out how to insure these vehicles and the drivers in a way where the interests are aligned, in a way that basically make sure that the drivers have peace of mind coverage no matter what they may be doing, one app or two apps or no apps or whatever, then we can also now bring in credit, which we think is sort of the bigger problem, because what's happened with banking since 2008 is they really don't want to help people with low credit scores and what I describe as complicated income stories. Again, if you have 2 years of W-2 income, it's great. But a lot of gig workers have multiple sources of income that may phase in or out. Like one year, hey, last year was an Uber year, this year is a Lyft year. Or maybe during the pandemic, I was doing a lot of Instacart. Like the banks weren't designed to figure that stuff out. And same with the insurance. So really, we really are using insurance as sort of the starting point to then also bring in credit. And then what the last piece of the stool, which last leg of the stool, we call advocacy, which is this idea of using all this data for our members, advocating on their behalf and helping them get all sorts of benefits, whether from the government or whether from commercial partners. And we're really proud that in 2020, in the height of the pandemic, we started our Buckle Cares program. We got our drivers more money from the government than they paid us in automotive insurance premium. And the way we did that is we had all the data so they could get an EIDL loan or grant within basically 90 seconds, and working with them on their behalf. So that's Buckle.
So if I go back to the credit portion, so on the website, you're saying that there's no credit check, but are you saying that you help them rebuild the credit? Did I hear that right? Or
we are actually,
well, in essence, I don't know if it's like rebuild isn't the right word, but reestablish maybe within their.
We're actually providing financing for vehicles in Georgia and Tennessee.
Okay. I just was wondering if maybe somehow being with you too and showing that they were making some kind of payment, if you were helping establish them to be more of a creditable.
We do. So we are trying to basically help them improve their credit scores. So we are, for want of a better word, reporting, credit data for our automotive leases to the credit bureaus, which does improve people's credits. But on our automotive insurance businesses, we don't use credit, nor do we report to the credit bureaus.
Okay. So what can I know this is a loaded question here, but
sure,
because it's state to state, it's driver to driver, all of us get all that, but is there any kind of metrics that you have to share that can tell people, like, just in some kind of average, what amount more they're paying to do either part-time or full-time delivery or ride share or whatever than they would normally?
That they're not currently paying right now. I think it's
let's just say that they're just carrying normal coverage and they start doing the gig economy, and then like 6 months in, somebody tells them, hey, do you have the right insurance? And they're like, what do you mean? I run into this all the time. It sometimes takes people like a year because these companies don't tell you when you onboard, hey, you need to have this insurance, even though you do. It's like everything else. They can't do that without being an employer, and they really are careful to not cross that line, at least most of the time. So.
No, you're right, and I can give you a little bit of the history if you'd like to hear it.
Yeah.
So our general counsel, Jeff Nash, was formerly with Progressive. And in the 90s, he created what was called the exclusionary language, that if you were on a personal auto policy and you're using your vehicle for delivery or livery, personal auto coverage would no longer apply. Progressive started it, then everybody else copied that language, and it became part of the what's called the Insurance Services Office standard. So everybody used it. And so what ended up happening was, all the auto insurers stopped basically paying claims out on Domino's Pizza. And so Domino's was told, as were other pizza delivery chains, you think Papa John's, et cetera, if you don't put in insurance, we will stop you from operating in our state. And so they did. And so what ended up happening was a number of employment lawyers sniffed this out and ended up suing Domino's and other pizza delivery businesses pointing out that by putting in insurance and then having to basically put in risk mitigations actions as part of that insurance policy, these are employees. And Domino's lost. So to this day, Domino's will tell you everybody who's doing all this work really is an employee, and they will continue to push that mantra. We believe it's a lot more nuanced than that, because a lot of people don't want to be employees.
Right.
And so
Most
what,
in my experience, but
yeah, it's about 90% of gig workers don't, because
mm,
they usually get W-2 income and benefits elsewhere, so they don't want to pay the double tax, right, on their wages. So what ends up happening is that there is some insurance in place by any of these platforms, but in every single case, it's the platform that's insured, not the driver, in every single case. And so if the driver gets any type of insurance coverage, it's as a third party to that platform. That's basically how it's structured today across all platforms.
right. Well, now I know that most of the ones that, I mean, I've been in the gig economy since 2014, and I can say that a lot of insurance companies like Allstate, Progressive, they now have that gig economy coverage, and they're kind of out there wanting to know about it. I remember there was a few years where it was even cloudy with them. If you called your Allstate agent and whatnot, they were kind of like, just, you need just straight up commercial insurance, no two ways about it. You need to be
Yeah.
paying full. And I feel like they've kind of come in with this is the gig economy level commercial insurance. I don't know if it has an actual title or anything yet, but
Yeah.
um I don't know, with that, like, is there any amount of money that, like, just to make people realize they really should do this, that it is worth it? Like, I don't know, how can we put this in a term where people in the gig economy can understand that it's not going to break the bank, but it could devastate you if you don't have it.
Yeah, no, I think that's well put. So first of all, when you look at the major insurers that are out there,
Mhm.
they all have rideshare endorsements. Some might call them gig economy endorsements, but if you look at them very carefully, they don't cover anything other than rideshare in most cases. There are a couple of emerging products out there that cover certain forms of delivery, but not all forms of delivery. Now, the question is, what are they really covering? Are they covering you, the driver? Are they covering your vehicle? Is it really a deductible plan? The answer is it's really hard to decipher. And given how much complexity there is in the differences between all the different platforms out there and the risk associated with it, um, you have to tread very carefully as a consumer, very, very carefully. The way we thought about it at Buckle was understanding that, Uber has one model, Lyft has a different model,
Mhm.
DoorDash has a different model, GoPuff has a different model, that we could take each of these models into account, and through our partnerships with them, share data, get data, and then basically make sure the driver is only buying coverages that fill in the gaps. Because why pay for coverage that somebody else is already paying for? That doesn't make any sense. And that was one of the big accusations against the big insurance companies in the early days of rideshare endorsements, which is, you're buying a rideshare endorsement, but all you're really doing is giving that big insurer the right to not pay out a claim because your app was on, right?
Mhm.
So a lot of that's changed over the last few years, but in short, there really is no one size fit all solution. You really kind of need to have the technology, the data, and the partnerships to engineer the insurance platform by platform by platform by platform. And that's really what makes Buckle unique.
Okay. So I mean, do you see a lot of difference in excuse me, just like a Lyft and Uber, even the way that they deal with the claims?
Yeah,
And I mean, like, I know that because they're so alike in every other way, are they
yeah.
that much different when it comes to dealing with the claims?
Quite a bit in our case, but I need to give some caveats here. So with Lyft, if you have a buckle policy, we take the first dollar of indemnity or the first dollar of any insurance claim across period 0, 1, 2, 3, and 4. And so Lyft pays buckle drivers more than non-buckle drivers. So if you've got a buckle policy with Lyft, you'll actually get paid more for each trip. For example, in Georgia, Tennessee, it's on their website. You can kind of go through the territories.
Okay.
But what that effectively does is it nicely aligns the interests between the driver, the Lyft in this case, and the buckle. So it's a very, very, for one of a better word, seamless experience. In Uber's case, Uber told us they wanted to take all the indemnity for all liability in periods 2 and 3. So what that means is now you really have, in certain cases, situations where we tell the driver, hey, all that third party, that's all on Uber. That's the way they wanted it. But the first party coverage is, for example, your vehicle, we'll take care of it.
Okay.
And don't worry about the $2,500 deductible, for example, what Uber does in certain territories. But that way it's very seamless to the driver. We make sure that somebody is always going to cover the liability in all the various periods of coverage. And it's different from platform to platform to platform.
So because it's kind of I'm gonna just for a second call it a la carte, because it's kind of a la carte type thing on which platforms you're working to, as to how you guys are managing, which companies what each user is aligned with. I'm guessing that, like, as opposed to Allstate, if I call Allstate, they're just going to kind of give me like this, you need to take this commercial insurance here, just take this huge plan, and they're going to sell me that at like an additional $700, let's say, a year.
Oh, that would be
like, let's say I don't even know, 1,200, 1,000, I don't know.
A true commercial policy doing rideshare, in many markets is $5,000 to $10,000 a year in many markets.
Wow. Okay.
Because
I know that there's some less. I mean, just from quoting around things, I know that that kind of sound, that reminds me of like years and years and years ago, the 5,000. But I feel like today it's a little bit less if you just call around, but that's maybe
well, yeah. So here's so it's a little nuanced. So we also provide insurance coverages for black car and taxi. So we actually do support black car in, for example, California and other places. And what's interesting about the black car policies is that if you are a limousine that's doing Uber and Lyft, the TNC model bill doesn't apply. That $1 million of liability does not apply. So, for example, in New York City, I believe liability is 300,000. That's the limit. In Georgia, I believe it's 51. It's $100,000 a liability limit. So the rideshare companies, from an insurance perspective, if you have a true black car policy, they really don't have to provide any insurance coverage on you at all, which has been, won out in, I think a lot of the law and the case law as a limousine driver. So, so what you typically will see is that if somebody is trying to sell you a insurance policy to do rideshare, they're really trying to sell you a limousine policy or something very similar to it with significantly lower limits than that $1 million. But if you are doing a full $1 million of liability, I'd be shocked if it was less than $5,000 a year in most places in the United States.
Okay.
So it comes down to there's the cost, but then what are you getting for the cost?
Right. I mean, like you were saying, like, I know that I think you put it into 4 periods. I've only heard it in 3, I think, which is
zero is personal. Sorry.
Oh, okay. So
period 0, 1, 2, and 3. Sorry.
Right. Okay. Yeah. So period 1 then is what, being on the app waiting.
Yeah.
Period 2 is you've got an active user, but you're not to the rider or job yet.
Correct.
And then period 3 is rider or user interfaced with you until drop off.
Correct. You got it.
So I know that like during the periods where you have the passenger and stuff, that's all pretty much covered through
Yeah.
these. That's where they kind of do have you fully backed.
Yeah, I would say that from a liability perspective, that's true, generally speaking, not always true. There's some
Right.
special
Well, I mean,
situations.
it seems like as close as you're going to get.
Yeah,
I
I'd say as
mean,
close as you're gonna get. And then, but for your car, your vehicle, not necessarily.
okay.
It'd be very different than what you're paying for. You know about some of the deductibles are a bit higher than $500.
Yeah. Right.
And there are some gray areas as well, like for example, what happens if I'll give you an anecdote, which is unfortunate but true. Passenger got out of the Uber vehicle. Okay, so period 3 is over, but was in a dispute with the Uber driver, so then kicked the driver's door, creating a couple $1,000s of physical damage. The driver's personal policy wouldn't pay because it was tied to that commercial activity. And the rideshare company wouldn't pay either because, well, period 3 was over. You understand what I mean?
Right. Well, then I feel like the personal should pick up because if he had ended the ride,
Right, but because it was still a commercial nexus, because that was a customer that just got out the door,
right.
shut the door, kicked it, there was no coverage.
Yeah,
So,
I
so
guess I get the kid. I mean, but at the same time, it's kind of weird because I mean, if you tell that story to somebody, like I understand it, I get what
yeah,
happened, and somebody should pay for that.
right. Well,
Like,
in Buckle's case, we would pay for it, but
okay.
what I'm telling you is like every endorsement that's out there is not designed for that use case.
So, I mean, I mean, again, to just the money amount, I know it's just too hard to call. Like, what is, so you're not paying for a full commercial license through Buckle, right? Because you guys are, you're measuring it against what platforms they're on. So if I was on 3 and I told you that and I got my quote, but then I added a 4th, I would just call you and say I've added a 4th.
Yeah, or you could do it yourself online. Sure.
Okay. But I mean, so, I mean, what are these, I mean, I know people can get the quote online. I've seen it, and actually on the home site, if people listening go and check the show notes and take a look at this when we're done, that you see that you can get. I think you can get a $20 Visa card too
Yeah.
if you just get the quote right now. So
Yeah.
so there's really no harm, no foul. But so any idea like what an average policy is taking people to, like, I don't know. Let's say that somebody normally pays. Uh, just for ease, $100 a month
Okay. Yeah.
on some personal policy.
Yeah. Yeah. So I would say in general, we can save somebody, I'd say anywhere from 10 to 20% on their car insurance. If they fit into the category of a lower than 670 or credit score, which is actually a large chunk of the population. So we are much more competitive than the what I would describe as the non-standard auto platforms out there. So that's not State Farm, that's not Progressive, that's not. But we're a lot more competitive to the 150 to 200 insurance companies and MGAs that insure those with lower than 670 or better credit scores. For those that are 670 or better, we tend to be a little bit more expensive. I'm just being blunt,
Yeah.
but you're actually getting real coverage.
Right.
And that's really the difference. So we have won some customers over from those platforms, although the big guys tend not to have as many gig workers as you would think. There are a lot more gig workers in places like the General, Assurance America, Bristol West, Kemper, quite a few in Progressive, but generally, if you're a State Farm customer because you've owned your house for 20 years and you're retired and you do this stuff on the side, I would say we're not going to be cheaper. But if you bought our policy, at least you'd have peace of mind they're actually covered.
So somebody can have all their insurance through you?
No, just their automotive
Just,
insurance.
well, that's what
Correct.
I mean. Can they move all their auto over though? Or does it have to just kind of be like a patch with another insurance?
Oh, no, no, no.
You
We
could,
take care of
you
the
take
whole
care of
thing.
everything.
We take care of the whole thing. And if you have more than one car, in a number of states, we do up to three cars.
Okay. So does it take into account how often you're doing
It,
gig
uh,
work, or does it not matter? Are these kind of,
yeah,
we
so
got
it
you covered? Because a lot, you know that a lot of people just like me, I have actually, I try and schedule myself out because I have a son and stuff. So I actually try and schedule out my week when I'll work gig work. But to those who just kind of might go, I'm going to turn on right now.
Yep.
I mean,
So
are they kind of covered all the time?
yeah, so the idea is that we underwrite and price at the point of initial policy. And then 6 months later, at the point of renewal, we'll recheck all the data sources automatically. And then basically update the pricing based on how much you did or did not drive.
Okay. So in the online quote, people, is that the best way to go, or should, I mean, can they reach it? Do you guys have like a, oh, I see the live chat that you do have on the website. So
We
you've got
do.
that going too, but,
We do have
so,
live agents that are licensed and ready to chat to people about the buckle policies.
so I know that you guys don't, you, or at least you have on the website, and we've kind of talked about it a little bit, that, you know, that, uh, people's credit score isn't the biggest deal, but are you running any kind of credit check when they're getting a quote?
We are not.
So what are you basing the quote on? Just
Yeah,
previous, is it just their driving record? Is it
we do look at your driving history. So if you
okay?
have speeding tickets, like every other insurance company
Right.
will know about things like speeding tickets, at fault losses, losses that are not at fault. You'll find that gig workers on average get into more accidents, but most of them are actually not their fault. And I
Right.
think if you talk to a lot of your listenership, you would realize the accidents they get in, actually usually they're not their fault. They're a third party fault.
Right.
Uh, but they do get in more because they're on the road more, and that's just sort of the law of being on the road more. So we look at all these sort of, for want of a better word, this is the amount of personal driving we assume, and this is the amount of rideshare driving we assume based on Uber and Lyft data. This is the amount of delivery activity we assume based on getting data from GoPuff and DoorDash and Favor and others. And then we put together sort of a profile. And what'll probably interest you, and you can probably imagine this, right, is rideshare risk is very different than food delivery risk for restaurants.
Mhm.
So if you can kind of think of it, rideshare, you drive up, someone gets in your car, drive somewhere else, they get off, right? That's a very different risk than you pull into the parking lot of of the uh, of the Burger King. You run in, you grab a big order, run out to your car, get in, you drive somewhere, usually, anywhere from, 5 to 7 miles.
Mhm.
You may get out of the car, but leave your car running. So you've heard about these carjackings that have occurred. You run the food in, and maybe the car's there, maybe it's not, right? Because of some of the carjacking. So very different risk than, say, food shopping, where you pull into the HEB, you get out of the car, you turn off your car, you do the personal shopping at the food, you load it in your car, you drive, usually less than 5 miles, you turn your car off, and then you basically deliver the food delivery, right? Different than Amazon, which is you work a 4 to 8 hour shift and usually have a vehicle full of, and versus our partner GoPuff, which they tend to deliver, munchies and other things all hours of the night. So each of these risks are very different, but we're able to basically customize, make sure that the driver has the peace of mind that they have full coverage from Buckle and our partners through all those various periods.
Okay. So yeah, I mean, I guess that the one main thing that's coming through to me today is that the ease of this, because I know that, basically in the past, if somebody's been in an accident or whatnot, and they've reached out to me, I tell them to contact legal rideshare, but I've even had them contact me back and say, I did. I sent them my dash cam footage. They said that this or this wasn't going to be able to do this, and what do I? So I mean, I know there's just been so much headache involved for the gig workers that I feel like some of them have just even given up on getting the right insurance because they're like, whatever, dude,
Yeah.
this just sounds like a nightmare anyway. I'm just gonna roll the dice and take a chance.
Yeah, unfortunately, that happens more often than not.
Right.
And
Because there
if it,
hasn't been a user-friendly insurance company like
yeah,
what you're describing right now. There hasn't been somebody that I don't know of another company that's come out and done what you're doing, where you're specifically geared towards the gig economy and you know and helping make sure that all the little dots are connected for Uber, Lyft, Instacart, GoPuff, Grubhub, Favor, DoorDash, Uber Eats, Flex. Um, I see that you've got them all covered, but I don't know. I don't think that anybody out there gets a personalized plan. And I don't even think that many people who do get the commercial insurance understand what they're buying, to be
yeah,
honest.
well, if you buy a commercial policy, you're often paying what are called duplicative coverages. So you're paying for coverage, but so is DoorDash. So now you're both paying, and in that trade, it's usually the driver that is paying for the unnecessary coverage. So we
Right.
just make sure that it's, because each platform is different and they each bring certain philosophies in terms of how they think about taking care of drivers, taking care of the public. And and that's very much reflected in their claims process and the coverages they put in place or don't put in place. And really we're the ones trying to basically put all the pieces together so that even though each of these platforms has very different coverage models, that driver on that buckle policy is fully covered, as long as they register which platforms are driving for up, on our platform. So
What about the platforms I don't see on here? Like, and I'm just going to use one, for instance, that I have worked with a lot is Curry, like
mm,
last mile delivery of like construction needs and things like that.
yep.
Um,
Well,
I don't see it on here. Does that work?
we're not yet.
Okay.
What's happened is, and you can probably appreciate this having driven for rideshare as long as you have. 5 years ago, it was mostly Uber and some Lyft. 5 years ago,
Right. Yeah.
4 years ago, it was Uber, Lyft, and Uber Eats was just emerging. Um, in 2020, we saw Instacart and DoorDash explode.
Right.
And what's happening now is that a lot of the retailers, for example, our partner Favor is owned by HEB. We're in a number of conversations with delivery platforms that are actually owned by large retailers. So this is early days, but we've built a platform that should, in theory, be able to work with everybody across all these different types of risks. And it's going to take us some more time to add in more and more of these platforms right out there. But if Curie, what's it called?
Curry. And it's Curri.
Curri. I will. If that's what it
Because they're in every state. That's why I use them. I know there's some startups in like a city, even just one city, let's say. And
yeah,
they're trying, and maybe they make it, maybe they don't, but maybe they sell out to Uber, maybe they do this, or Roadie sells out to UPS or that. But Curry is in every state now. So that's why I brought up that one, because I know a
okay.
lot of people doing it in the gig economy. And I know there's other ones out there too I could probably name, but I would have to think about one that's in every state. That one, Curry is.
I'll make sure that one's added to our list.
Okay.
So, um,
So that's
but
kind of how it works. I mean, like if people do have another platform that's like national or something, you guys can start to maybe help them. Like, hey,
yeah.
I work these three that you guys do cover, but I also work this other one.
So that one I'm going to have to check with you on, but I specifically Curry.
Yeah.
But part of our product roadmap is basically add everybody to the platform in time, and we're getting, I think, better at it. Really excited that we added several delivery companies last year. We'll add more this year, but it's amazing how fast this is all growing and how the players are evolving still. So
Well, because it's a space that I'm kind of surprised you guys are the only ones in it, to be honest. I'm just being honest here because it's almost like the legal people who started up around the gig economy, who based it
Yeah,
just on gig economy. It's like, I'm surprised nobody has done the insurance one, because that's one of the biggest headaches I've ever talked about on the show with
it's a
people is, are they
really,
carrying the right insurance? Are they, I
yeah.
mean, and I've had every answer from no, I just don't even want to talk about that. I've got my blinders on, to
Yeah.
yeah, I have $1 million or $10 million commercial policy just to cover everything I do. I don't care. Like,
No,
and everything in between. So it's
yeah. Well, thank you. I mean, it's a hard problem. We've been working on this for 5 years. We filed a patent on this thing 5 years ago. It's interesting, the things we were talking about in that patent. You're starting to see things emerge today that are reflective of the sort of new reality. And really, that the hard part isn't, for want of a better word, a one size fit all policy where you don't have to worry about anything, or the other extreme, which is your most insurance companies don't want to be on any risk that they don't understand, right?
right.
But now you're looking at these risks that are hard to understand. Going back to my comment, rideshare is different than food delivery, which is different than package delivery, which is different than Amazon delivery, which is, like, they need the data to go do that. They need the partnerships to go do that. They need to be really kind of all in on the gig workers. And the way we've always thought about it is, we want to be all in on gig workers. And insurance is great, and it does solve a lot of pain points. But if we can use that insurance to bring credit, we think that's actually the bigger pain point, getting credit for gig workers. And
Right.
then, I think another pain point is there are, I think, a lot of both government and commercial organizations and nonprofits that want to help gig workers. They want to give them discounts. They want to give them, federal loans and grants. They want to give them all sorts of assistance, but they don't have the data and they don't know how to do it. And so, hopefully we're filling the void in this, ecosystem that's just going to require a new kind of financial infrastructure, a new kind of partner, for these, for what we believe is the rising or emerging middle class.
Yeah. I mean, I can't agree more. And I know that everybody I know who listens, or most people who listen to the podcast, want to be independent contractors, stay that way. They don't want to be W-2 employees, but yet they all have this same problem. And I've talked to so many about I most of the time just let it go, in fact, and try and stick with whatever the subject is that week, because I've heard all those answers, and I always just worry, like, okay, if something happens to you, this is gonna be bad, or you're over covered or whatever. But it sounds like, it sounds like you guys are on the right path, at least to make it worth coming over and checking. Maybe even gig workers listening have checked other platforms or called their insurance company, like I've asked or told people to try before, and they decided this is too expensive. I can't
Yeah.
do this. This is just going to be too much money. I'm just going to keep rolling the dice. It sounds like this is the platform for them, that they should at least come over and check it out, get a quote, and also see what that quote brings them. So even if it's just a few dollars more than what they are paying, maybe it comes out to, I don't want to say this and be out of line, but even less, maybe.
Yeah. Well, I think, what I would simply say is, if you're lower than 670 your credit score, probably there's a good chance we're gonna save you money, because we
Okay.
don't get credit score.
So
Um, if you are,
bottom line is that metric right there is almost, you're almost guaranteeing that one.
yeah, we feel pretty good about that one. If you're better than 670, we're gonna be more expensive, but you actually get more coverage.
Right.
And that's actually potentially a lot more important.
Right.
Because it's a little deceptive, because if you're saving, $20 a month, that's great. But when you get in an accident, you got an $8,000, collision repair bill, and coverage. Well, that's really expensive. So you had asked me the question, if you have one of these policies, like, and you think about, having these loss events, what does it really mean? And we're struggling with basically quantifying what it means, but we think it means, effectively, you might feel like you're saving, a couple $100 a year for that really super competitive online quote. But when you get in an accident, there's no coverage, and you got an $8,000 bill. Well, that was a bad idea.
Right.
And but when you sort of look at those sort of big events, we believe that, we're saving people, even though it may not be reflective in the just the cost alone, but the additional coverage, hopefully a couple $100 a year. So in a
Okay.
lot of
Well,
cases.
yeah,
Yeah.
that's huge. I mean, even if people end up paying near the same, but they have the peace of mind to not have to go, I don't know if I'm covered or not, or I'm over covered. To have that
Well,
peace of mind knowing, okay, I'm covered and this is what I'm paying is a pretty, I mean, because I think I think to be honest, I think that's one of the biggest points is that people don't understand their insurance policy who don't do gig work. I think a
right.
lot of the time because insurance just gets to be kind of sticky and
Yeah.
overwhelming to a lot of people. Like I don't want to read all this paperwork and understand every little thing that I need to know
Yeah.
about this. And it is true. I mean, insurance is a little frightening sometimes to dive into it and try and really understand. But the bottom line is, even when I land at your website, I can see right away that it's based around what I do for work. And that right there tells me, okay, even if I'm going to be in that same boat of like, it's still a bit of a headache, at least I know I'm covered and on these platforms. And that's a huge
Yeah.
thing. Like right now, I know I don't know. You and I both agreed that about 90% want to be independent contractors, but I don't know how many. I would hate to guess on how many people are doing gig economy work without correct insurance.
Oh, it's
I
most of them.
because sadly, I would think it's right about that same number.
Yeah.
you know,
I think for the rideshare companies, if you've got a rideshare endorsement, you're mostly okay, but not completely okay. But if you're doing delivery, you got to really watch out, because there's some delivery platforms, and I won't name them right now. If you get in an accident, they tell you it's not their problem.
right?
And it's really sad, and you can go to the Reddit channels and see it, but there are not a few number of them who will simply say it's not our problem. You had tacos and you got in an accident, not our problem.
Right. Well, I mean, I hate to say this, but my guess is most delivery drivers would try and claim it as not being on the platform.
Yeah, I think that's definitely going on right now. But unfortunately, you've got an honest guy who now has got an $8,000 bill,
Right.
and was just trying to make a couple $1,000 of side hustle income. That's it, and just wasn't worth it. So
Right. And I think that that's something I've pointed out to people too, is like, these people who take underage kids, which has always been a pain to me. Like it just drives me nuts because they even know it. And they're like, well, my mom okayed it. Well, dude, if they're under 18, you can't take them, period. Like, and I've told people, your insurance is going to walk away. The other insurance Uber's going to walk away. You're going to be
yeah.
like you could be left with the rest of your life paying this off, that one ride. And
Yeah,
it's
it,
funny. It's not just underage kids. There's so many other different scenarios where I just, people just, again, they're not that aware of their insurance. They're
yeah.
just not. And I got it. Maybe you have insight on this, maybe you don't, but I'm kind of curious why, even though these companies can't give us, hints or, like, here's what you need to do because we're independent contractors, they're able to produce videos like Rain that are for, like, not sexually assaulting customers and this and that. And you have to watch those videos before you can drive again on the
Yeah.
platform. So why don't they have one on insurance where you have to watch 3 or 4 videos that are 4 minutes long before you can, and then you have to upload the correct
Yeah.
insurance. I don't understand why they let
Well,
everybody on like this.
yeah. So first of all, you got to make the jump that accidents are happening whether they're insured or not.
Right.
And in the cases where they're not, which is happening in a lot of situations, it's really the drivers that are paying for it.
Right.
One of the reasons we're so excited about our partnerships, particularly the partnership with Lyft, is that Lyft has recognized that, hey, if all these things are covered, and there's just and that clarity is brought there, we'll pay our drivers more. So what we expect to happen over time is that the drivers will take on more of the insurance indemnity. They'll pay for it, but they should get paid more for it too.
Right.
And that'll create hopefully a happy situation for everybody. which is the best drivers are actually driving more and getting paid more.
Right.
Um, what I now just walk through is an employment nightmare for any of these platforms. Paying good drivers more than not good driver. I mean, it just, they can't do that, right? These are all contractors. You kind of got to live by certain, for want of a better word, what I call peanut butter rules. You got to treat everybody the
Yeah.
same.
Yep.
But when you look at it, there are definitely some people that should not be doing rideshare that are doing rideshare, and there are definitely some people doing delivery that shouldn't be doing delivery. But their pay is essentially the same pay as the very best rideshare and delivery drivers.
Yeah. And
And
that's, I
that's
mean,
where we are
even if
right
it
now.
came back and I mean, again, even if it came back in the way of a check or something, I don't know if that's how, maybe it's a way around it, but I just feel like if they can make us watch rain videos and still be independent contractors, there's got to be a way to say, hey, do you have the right insurance? And walk
Right.
us through one of those cartoon videos like that says, hey,
Well, so unfortunately, there's only one really good solution for rideshare, and that's a true commercial policy, other than our policy.
right.
And we're not in all the states yet. And delivery, there really is no good solution other than our policy. And we're now covering 20% of gig workers in the United States. I'm hoping we'll finish the quarter over 25%, but we're coming as fast as we can to provide a commercial solution so that, to your point, there actually can be a video, and at the end of the video, you can say there's actually somebody that provides you what you need.
Right.
Because right now, there really isn't a good solution in a lot of parts of the United States, not at least until we get there.
So where are you and where aren't you? I mean, without listing every state, but I mean, like, is there
Yeah.
a way to
So,
explain to people or?
so I know Georgia, Tennessee, Illinois, Texas, Maryland, DC. I believe we're in Pennsylvania by the end of this month. I know other states are coming. So, but
So
we're
have you been adding the states fairly quickly lately, or have they
yeah.
all been on board for a while?
So it takes a while because every state has got to sort of approve you and let you in.
Uh-huh.
But I expect this year you'll see quite a few more states added to the rolls.
Is
So
Colorado on your list for
it's
soon?
definitely on our list. It's
Okay.
definitely on our list. Yeah.
Yeah, because I don't think we're one of the roughest states to work with. It's more about just adding it, right? Yeah, it's not like California or something where it's just nuts.
Yeah, California is tricky.
Yeah.
We are pleased to provide black car drivers in California a policy, but hopefully we'll have our gig policy there realistically in a year or two. But
So if you just
hopefully,
had to throw a dart and guess, when do you think you'd have all of the lower 48 states?
well, that's a good question. I might ask it differently, which is when might you have the top 100 DMAs? I think we could probably have the top 100 DMAs, assuming California and New York approve everything, which are two hard states. So
Mhm.
I'm assuming those get approved, which,
Okay.
to be clear, California only recently made its first approval since pre-COVID to any insurance company. So it's been a year and a half where they really haven't moved on anything.
Right.
But hopefully by the end of next year, we'll be in most of the top 100 DMAs.
Okay.
So
So kind of almost monthly things are moving and
yeah,
changing.
yeah, it's harder to get to like a Wyoming because it's not doesn't even have a top 200 DMA in there.
Right.
And it's some of the smaller states are going to take a longer time to get there
Yeah.
because we can only prioritize based on the resources we have.
Right. I was reading something that there's more deer in Wyoming. Wyoming's right above me. There's more deer in Wyoming than people.
Sounds
So,
about right.
I mean, I know that they have Cheyenne and Jackson Hole, but other than that, all the towns are pretty small. So
Yeah.
it's quite a bit of state without many cities that are populated over like 200 really, or 300. But Yeah. Okay. So for the states that you are in and whatnot, and people, if they come there and try and get in a bid on a state that you're not in, it'll just kind of bounce them back, or does it?
Yeah, I believe we're going to collect their information and we'll keep them apprised of when we will be in their state. I think
Okay.
that's so.
Okay. Well,
And
so,
then we are introducing our advocacy effort this quarter, which will cover all 50 states. And those are our partners that can provide discounts for maintenance, other things that leverage things. So we want to support all gig workers free of charge. We're not making anything, but anything we can do to help them get save money or make money from our commercial partners, from the government or nonprofits. Those are the things we'll be doing with advocacy. So more to follow on that.
so stay tuned to the website. Is there in social media, or is there a specific platform that's best to keep up with Buckle on?
I'm not sure what the best platform is. I know we're active on a few of them, including obviously Twitter and Facebook. But I'll have to follow up on
But the website's up to date as far as
the
I can tell
website's up
from,
there.
yeah, from
Yeah.
looking through it. So
Yep.
people can find all their information there. And I want to thank you, Marty, for coming on today and helping us understand this a little better, because I think this is something that everybody should at least, there's no harm, no foul kind of thing to check this out, price it
Yeah.
out. I think you'll feel good even just landing at the website and seeing the logos of the companies you work for and knowing, wow, this insurance company on their homepage has my companies.
Yeah.
It's not just like something I got to scratch my head and go, should I bring this up to the guy? It's like they're just throwing it right in your face. So it's right there. So get over to it is the company's Buckle, but the website's buckleup.com.
You got it.
And I'll put everything in the show notes, but it is Buckle, right? Just it's
It's
not Buckle Up, it's just
yeah.
Buckle, yeah.
Yeah.
But yeah, the website's buckleup.com. And I want to thank Marty for coming on today. And yeah, we'll stay in touch for sure.
Yeah, Steve, it was a pleasure. Thank you very much.
Okay.